If you're interested in learning how to identify what some of the best shares to buy in 2023 could be, then you are in the right place. 2022 was full of wild market movements not seen for many years. The collapse in global stock markets due to rising interest rates has now created some very interesting themes for 2023. Subscribe to the channel and watch this video to the end. I've left a surprise in there. 1. ASML Holdings. ASML, a little-known Dutch chip maker supplying the world. While many investors may be familiar with semiconductor companies such as Intel and Nvidia, not many will have heard of the Dutch firm ASML Holdings. According to semiconductor analysts at Bain & Co., ASML is absolutely critical to the entire semiconductor ecosystem. The company was founded in 1984 and has more than 37,500 employees and a €220 billion market cap. ASML Holdings is the only firm in the world that is able to make the complex machines that are needed to produce the world's most advanced chips. Each machine costs nearly $140 million, has more than 100,000 components, and takes 4 jumbo jets to ship. ASML's machines have the ability to create small shapes on silicon shapes. How small are we talking about? Down to 13.5 nanometers. The world's largest chip maker, TSMC Taiwan Semiconductor Manufacturing Company, have used ASML's EUV machines in Apple iPhones, which have more than 10 billion transistors on each chip. The importance of ASML is undeniable. As chips are in everything nowadays, there could be more long-term growth yet to come. However, the semiconductor industry struggled over the pandemic with lower production and then lower demand over 2022. If these situations improve, it could become a stock to watch. Do you have any shares in this company in your portfolio? Thank you for your opinion in the comments. Best shares to buy. U.S. stock market. The U.S. stock market entered into a bear market in 2022 with many stocks and indices falling back to levels not seen since the 2020 pandemic. Is the pain over? Many analysts are focusing on defensive stock sectors such as consumer staples and healthcare companies. If the economic condition improves throughout the year, then tech stocks could attract even more attention. Identifying the difference between value investing and growth investing may prove to be important as the year unfolds. 1. United Health Group, UNH, largest health insurance company in the U.S. Towards the end of 2022, analysts at Goldman Sachs turned overweight on healthcare and consumer staple stocks. Healthcare stocks can be tricky as they can be extremely volatile depending on how clinical trials go. Another way to invest in the healthcare sector is through the largest health insurance company in the U.S., which is United Health Group. Founded in 1977, the company has a market cap of more than $500 billion and at the time of writing a dividend yield of 1.25%. The company provides health insurance plans and health savings accounts for those in the U.S. Its long-term share price has only had a small impact from recent events, showing that the stock's resilience. After such a big move higher, the stock may enter a period of consolidation. However, any meaningful pullbacks on the stock's price could be interesting for growth investors. Without any significant pullbacks, the stock could be more interesting for momentum-based traders. 2. Amazon, AMZN, a potential growth to value-based stock. Amazon was once the stock that could do no wrong. It was the leader in the growth style of investing. However, 2022 was a turbulent year for Amazon. The stock price collapsed more than 50% lower from its record high in July 2021, with the stock falling below $100 in 2022 for the first time since 2020. Many analysts have turned increasingly bullish on it. At the end of 2022, according to data from TopRanks, there were still 33 buy ratings on the stock, with 2 hold and 0 sell ratings. The stock also sank below the lowest price target of these analysts, which was $103. Analysts point towards the investment in its cloud computing service Amazon Web Services. The shift towards e-commerce and cloud computing is growing exponentially, in which Amazon is a key player in. While Amazon was always touted as a growth stock, it is now exhibiting some value-based characteristics. For example, the share price towards the end of 2022 became undervalued because the Amazon Web Services division, its cloud computing business, was worth more than the total value of the company. In December 2022, Amazon's market cap was around $950 billion, while Amazon Web Services had a value of around $1.2 trillion. How to find the best shares to buy? Buying shares online is actually quite a simple process, as our step-by-step walkthrough in a later section will show. However, identifying what shares to buy does require some skill, research, and preparation. Even then, there is still no guarantee of success, which is why risk management is important.